So I want to first welcome all of you to this webinar, and thanks for taking the time out. And thanks to our current investors for taking the time out to join us. And thanks for all the people maybe that haven't invested in Kalon and are interested to hear more about what's happening in the tech world and what's happening at Kalon Venture Partners. My name is Clive Butko. I am the ex-COO of Accenture South Africa. I spent 28 years at Accenture, and during that time I spent many years in ecosystems, entrepreneurial ecosystems like Silicon Valley and other places, India, Boston, New York, in building tech companies. I retired from Accenture at the end of 2012. And since then, really, I followed my passion of starting a venture capital company called Kalon Venture Partners. We have raised quite a bit of capital. We've made 8 investments. And this is the follow-on sequence from Fund 1, which is our Fund 2. And today we'll be talking about a number of items that are on the agenda around our current companies, etc. Just some hygiene issues. First and foremost, if you want to ask, please, any questions, we'd appreciate as many questions as you possibly want answered, but we have disabled the chat and the Q&A is open. So if you could please share them on the Q&A, and Laurent and Sean will take them down, and we'll open up at the end of each agenda item, we'll open up for a few questions, and then at the end we'll have a lot more time for a lot more Q&A. Just to remind you that this webinar is going to be recorded, and the deck that we will be talking about will be available for your perusal once, probably in the next 1 or 2 days. So, yeah, so as I said, please pop your questions in the Q&A, and then I'll go on to the agenda for this afternoon. Laurent? Okay, welcome to all of you. There's about 300 people, just over 300 people on the webinar. So I'm going to be starting out today's discussion with what we've seen is the top 10 technology trends driving digital transformation, digital innovation during the 4th Industrial Revolution. Well, then I'll talk about how we as Kalon, as a venture capital company, how we're performing. So the current investors, you'll get a snapshot of exactly how your investment is performing, where we are today. And for any new possible investors to get an idea of how we've grown the companies over the last couple of years. After that, we're going to have 4 of our company CEOs will be presenting. We'll start out with a video clip from one of our companies, and then there'll be 3 more of our investee company CEOs or co-founders that'll be presenting after that. After that, I will summarize and wrap up, and then we'll go to a question and answer session at the end. But we should have ample time at the end for Q&A, but please keep your questions going. We would appreciate as much as you would like. Lauren, you want to move forward? So just a bit of background. So, you know, as the market has shifted in the last year since COVID-19, it really has accelerated digitization and transformation of digital capabilities, probably about 5 years. And if I think back to my Accenture days and how fast digitization was happening, and the first few years of our fund, how fast digitization was happening, it really has been accelerated. I've seen the experts say 5 years. I would absolutely agree with them that it's at least 5 years that it's been accelerated. The virus really has transformed businesses and has been a huge challenge for many industries and many organizations like hospitality and many other industries and verticals that you're all aware of. But at the same time, it's offered us many opportunities in the tech space. So in the talk today, I want to talk about the 10 biggest trends that we are seeing that the virus has really accelerated and are going to be very important to businesses going forward. Laurent, next slide. The first lesson is artificial intelligence. Now, artificial intelligence is most likely the most powerful technology that humankind has ever had access to. Artificial intelligence and machine learning enable businesses to make decisions, carry out tasks, and even predict future outcomes based on what they've learned from the data that's out there. I believe artificial intelligence will transform our world and how we live in it today. It's already probably most likely using it every single day. If you do a Google search, you're using AI. If you're using Netflix, you're using AI. And really, we're seeing AI in every single form of life and every way of life. They are transforming digital tech platforms, and we're seeing more and more of AI as a technology being utilized in everyday life. One of our companies I'll talk briefly about later, CarScan and FinChatbot, another one of our companies, are using artificial intelligence to solve big problems in the current marketplace. Next slide, Arun. The second big trend we're seeing is that of big data. Now, data today is an asset. We never really treated data before as an asset. And a lot of these technologies have enabled data to be processed and extrapolated, and a lot more information and insights being brought out of that data. So our world is full of data, more than, as I said, more than we've ever had before. And the more data you have as an organization, the easier it is to gain new insights and predict what will happen in the future. There's analyzed data using intelligent algorithms. That's what big data enables us to do. There's something called the Internet of Things, which has been connecting, as it is today, about 20 billion devices are connected via the Internet of Things. And they're predicting in the next couple of years, about 500 billion devices will be connected through the Internet of Things. So big data is enabling us to make those real-time decisions. Is it a credit scoring decision? Do I want to give a loan out to this person? Is this person going to pay me back, et cetera, et cetera? And there's been many, many apps, and you'll see some of them that we're talking about as well that leverages this big data that are sensing movement of people and assets in the corona era that we're going through now. And as I mentioned earlier, there are many intelligent algorithms that do extract insights and automatically spotting patterns that we never knew of before. You've got something called quantum computing that is processing at a speed that is 100,000, 10, 20, 100,000 times faster than the old traditional computers used to do. Next slide, Arun. Cloud computing. Now, this really is about the storing and processing of data in a third-party data center. And what it's enabling us to do is companies from going local to going global. If you look at just Zoom as an example, so we were able to use Zoom when Corona hit us because Zoom was in the cloud, and it enabled us to have calls like this where I'm just checking, but we currently have close to 320 people on the call. Now, in the past, before Zoom was in a data center, this would not have been available. So, I mean, cloud computing really is revolutionizing our experiences working from home, doing global shopping, doing Zoom, and it's all been enabled by cloud computing. It's given us greater flexibility and scalability to scale our operations. And if you look at the companies we'll be talking about later, our 6 companies in Fund 2 of Kalon, all digital disruptive technology companies, are all utilizing cloud computing to provide the service to South Africans, to Africans, and people around the world. So it does enable faster and more reliable computing. And as I said, whatever use case that you might have. And organizations today are adopting more a cloud-first mentality. I remember many years ago where every IT manager said, there's no ways we're putting our data in the cloud, and that has completely changed. It is now the standard is going in the cloud, and the non-standard is actually staying with on-premise data. So it's in any company upgrading the IT infrastructure is going towards cloud computing. We're on next slide. Faster networks and 5G. Now, we all know we've all had 3G, which enabled us to get and access photos and things online. We had 4G, where we can use things like Netflix, and we could stream videos, and we could stream music, and with Spotify, et cetera, et cetera. We're now moving to 5G. Now, 5G really is, the world is getting more and more connected today than ever before. People, as I say, working from home, but we need super fast internet access to enable businesses to achieve even greater things by using artificial intelligence, machine learning, and other things like that. And I think there's a big race on in South Africa is who's actually going to win the war of 5G. Rain is the one provider that provides it at the moment, but a lot of the other service providers are forming alliances with places like Hawaii and other network providers in providing that 5G networks. So as I said earlier, basically every trend I'm talking about today will be enabled by 5G. And as 5G becomes more and more part of everyday life, we'll be able to do more and more things, and businesses will be able to react to customers faster and faster. So if you look at what people are doing now, businesses are analyzing data. They want to make decisions in real time. And this real time prevents the latency. 5G prevents the latency that you've got today. If you look at Elon Musk and autonomous cars, the only reason you can run a car that can run without a driverless autonomous car is with the use of 5G. That there's no latency, that it doesn't forget it doesn't have a second gap between the data that's going into the car, because obviously that would be a problem for the car and obviously for the passenger that's sitting in the car. So it'll give us speeds, as I said, that were just most things in business today were never possible before. And once again, our companies are going to take advantage of this 5G and provide superior services to our clients. If you look at today 5G, one of the problems we have with 5G in South Africa and pretty much around the globe, you need a specific 5G phone to enable you to use 5G. Now, if you look at, I think it's MTN are providing 5G enabled phones for about 650 Rand. So I think $40 are enabling to buy a 5G enabled phones. So this is enabling autonomous cars, drones, telemedicine. You've been able to, for people to get operated on from India into South Africa or anywhere parts around the world because of that unbelievable speed of 5G that's enabling these things that we could never do before with the accuracy and the efficacy that we're seeing now. We're on next slide. So what we're seeing as well is, and again, one of our companies we've just recently invested in is an AR, a company using augmented reality for cars, scanning car images, which is called Car Scan, which I'll talk about later. But extended reality is an emerging umbrella term for all the immersive technologies, like virtual reality, augmented design, extended reality, etc., etc. So they're all using that terminology of extended reality. So really what this is the real world extended into the digital world by the use of these types of technologies. It is by way of enhancing the customer experience. So I say there are better ways of finding and selling products across e-commerce. You know, you can try on a watch just using your augmented reality PC, your augmented reality iPad, your augmented reality, whatever device you might be using, your mobile phone. So you can physically try on that Rolex watch that might be being sold in the UK. You can try it on your hand and see what it looks like. People can put on makeup. Hopefully women can put up makeup and see what it'll actually look like. Sephora has enabled a online makeup jewelry. You can put on the jewelry, you can put up the makeup using extended reality, and you can actually see what the makeup and the jewelry looks like without ever actually going to the store, and you can then procure it from the internet sites. If you look at meetings like we're having now, soon we'll have these in 3D. So using your headsets, we'll be able to create a completely immersive experience. We will all actually be in the same room and feel like we could touch each other, feel each other, and see exactly what's going on. Not like the 2D experience as we are experiencing it now. So as I said, we can replicate the online and offline shopping experience, and many industries have already started using this technology to enhance the customer experience. And it's all today, and COVID has, as I said, accelerated this, but it's very much about what are we doing in the world where we can't be potentially in retail shops, we can't be in the beauty shops, whatever it might be, and how can we achieve the same outcomes by using fourth industrial revolution technologies. And so, so these 3D meetings is enabling us to extend into the digital world from the physical world that we've got today. And I'll talk more about Car Scan later, how they're using augmented reality to solve a huge problem in the insurance sector and the automotive sector as well. We're on next slide. So I've already spoken about enhanced e-commerce, the next generation of e-commerce. So e-commerce, as you would know, since the lockdown has grown, it's been a couple of 100% in South Africa, but we're still in South Africa only sitting about 2% of retail sales are coming through e-commerce. But the difference is in the past was growing at about 40% year on year. It's now growing at a couple of 100% year on year. So you're going to see more and more people moving away from bricks and mortar and integrating online to provide an omni-channel digital experience to their customers. I don't believe this is only a COVID thing. I think this is going to be way beyond COVID. And once again, we'll talk about Ozo and Mobis and a couple more of our companies that have taken advantage of the e-commerce boom and now become the plumbing for e-commerce to enable e-commerce in the South African market. So I talked about artificial intelligence earlier. It really enables you to provide hyper-personalized recommendations for e-commerce customers. And Mobis I'll talk about later, and Greg will also be talking about it. We'll talk about how this is enabled. Last mile delivery services has become a big part of the next generation of e-commerce, that you need that. If you look at 6060 from Checkers, or you look at bottles from Pick n Pay, they're enabling, I know, 60/60 1-hour delivery from many of their stores. So what else has been e-commerce infrastructure? If you take COVID, we went people are looking for no-touch payments and digital marketing. So again, a lot of the businesses we're investing in now are no-touch payments. Ozo, as an example, which is our electronic funds transfer business, it does not require any touch. You don't have to touch any buttons on any credit card machine or anything. So you don't have to run the risk of picking up COVID from a teller or from a Visa or MasterCard machine. And e-learning platforms, which is an investment we're making right now into an e-learning platform, is also proliferating from school to retirement learners. So more and more enhanced e-commerce is going into in the education space, really from, literally cradle to grave. So from when you're born till, when you're retired, 60, 70 years old, and we're investing in a company that does that at the moment. Next one, Laurent. Very, very important part of this whole component is cybersecurity. So as more and more things are added to the internet, we need ways of defending computers, networks, and data from malicious attacks. And as we see a growth in these digital components, these have created enhanced cybersecurity threats, and we're much more vulnerable today to cyber attacks. I must be, and honestly, and I think I have to admit this embarrassingly, but I was defrauded 14,000 Rand during the December period by an email that came to me. I thought it was a legitimate email. I should have known better. I really should have known better why and what not to do. But I went on and I actually lost 14,000 Rand through a fraudulent transaction. And we'll be talking more about Senmark, which is our cybersecurity company. And Sasha will be talking more, one of the co-founders of Senmark, more about how Senmark is doing in the South African market and overseas market as well. So we have to ward off all these increased automated attacks. And what's interesting is people are using artificial intelligence to make these cybersecurity threats much more threatening and really disarming lots of businesses and disarming and disabling many consumers as well from accessing their bank accounts or wherever it might be. So what we're looking at the cybersecurity companies are companies that can prevent phishing and spoofing. And I'm sure probably every one of the 300-400 people that are on this call right now have probably been phished or spoofed during their time. But as I said, we'll be talking about that later. And at the same time, we're using machine learning for better fraud detection because the AI is using it for better cybersecurity, but machine learning is used to detect threats better in this new fourth industrial revolution world. Next, Laurent. Social engagement. So social engagement, we all know about social media and Facebook and Instagram and all the other social media platforms. But this is getting more and more important. We see in this year in 2021 and beyond that as well. So it really is the process of communicating and engaging in online communities. So it's about how businesses respond and react to their customers' requests, complaints, comments, whatever it might be. So to enhance the customer experience, businesses are realizing they need to remove the automated responses to their social media and have real people engaging with real people. So far more authentic use of social media, which is not curated and not just done by some communication person. It needs to be done by someone that's speaking on behalf of the organization to represent their brand. There's also being various influencers also being used now to represent one's brand and engage with many or hundreds of millions of people through social engagement. Next slide, Lauren. So we want to talk about voice interface and chatbots. You've probably all heard about chatbots. You can now talk, you can Siri or whatever these things might be. I'm sure we all use them in our day-to-day life. We talk to bots, we talk to chatbots. It determines exactly what we're saying. It translates it in real time. You go to YouTube today and you put on that icon. As you speak in YouTube and the recordings, they get translated into English or I think whatever language you might request. So the increase in chatbots has been unbelievable. So as I said, everyone's using it in their day-to-day life. But what we're finding more and more, and we've invested in a company called FinChatbot, is this conversational artificial intelligence for both consumer and enterprise applications. And we'll talk more about FinChatbot later and the traction we're seeing with this chatbot in using artificial intelligence in the South African and European markets later today. The chatbots are becoming more intelligent. I mean, this is quite sad, but Microsoft has developed a chatbot that can actually mimic someone's spouse that's actually passed away. So you can have a conversation with your ex-wife or ex-husband or boyfriend, girlfriend, whatever it might be, actually through a bot. But it's learned, it is so intelligent, it can actually have that conversation mimicking like it was actually that person. Where we're seeing a lot of voice interface and chatbots is also in the contact center solution. I mean, I'm sure all of you have experienced a terrible experience in talking to a call center or waiting a half an hour to an hour and then it cuts off. I've had that experience, unfortunately, many, many times. So these chatbots and voice interfaces are enabling more customer experience, a better customer experience, and more reliable and efficient use of contact centers, or cutting out the contact center entirely. FinChatBot, our AI company, probably it cuts out about 95% of the need for a customer support operator, and 95% of the processing is done on the phone or in the cloud. Last one, Laurent. So the last of my 10 trends. Now, this is by no means the total number of trends, but these are just what I felt were the top, or Kalon felt were the top 10 trends that we wanted to share with you today. So a platform is a business model that creates value by facilitating exchanges between independent groups. You've got the likes of Facebook, Uber, Airbnb, and a number of others as well. And these are, if we look at the investment we're making in an e-learning platform now, it is also a platform that brings together learners with teachers. So it's a complete platform play, which is a far more than just a super app or just an app. It's a platform play. So the gig economy is something that we term where we can just get the skills we need. It might be a cleaner for our houses. It might be a plumber. It might be an electrician. It might be anyone. But we can just do that on a platform where everything happens on the platform, and it brings suppliers and customers together. So if there's inventory in suppliers and customers want to use that inventory, whether it's time, whether it's an Uber driver, whether it's accommodation through Airbnb, it enables that transaction to take place. And that is all enabled on our mobile phones. We don't need to go to a laptop, a desktop, or anything else. It's enabled by mobile technology. It has definitely enabled digital platforms, remote training and distance learning, and very, very personalized education. So again, I'm not going to talk a lot about our latest investment we're making early, probably next month, but that's part and parcel of this digital platforms. And there are a lot of online financial services, whether it's wealth management, whether it's taking out loans, whatever it might be, is enabled by these digital platforms. If you look at Bank Zero, if you look at Time Bank, if you look at all these digital banks that are coming out, these are actually platform plays opposed to just solutions that we're used to in the past. Next slide, Laurent. So before I continue, so that was the trends that we had. I'd just like to go to Laurent and see if we have any questions before I move on to talk about the fund, Kalon Venture Partners, what we do, how we're doing, and how each of our companies are performing. Laurent, any questions?
Hi, Clive. Yeah, sure. There were a few comments and some questions. The one was from Isaac saying 5G will be a game changer, but only once spectrum becomes more readily available and data much cheaper. Until then,
absolutely right there, Gerard. Absolutely 100%. We have to get so much infrastructure in place before we get 5G working in a country like South Africa, and at a significant capital outlay.
Then we also had a question from Graham Cook. We're aware of threats associated with hackers using AI and ML for attacking systems, resulting in breaches of data and compromised information security. How is this affecting info security strategies? And also from a cyber risk assessment and information security management, which is much wider than email security, how would you address cyber resilience and information management?
You know, what I'm going to do, Graham, thanks for the question. I'm going to leave that when Sasha or Sam get on later, and I'm going to leave the cybersecurity experts to answer your question. They'll do a better job than myself. But we'll definitely get Sasha or Sam to answer that, the co-founders of Senmark.
Great. Then we've got a question on how are these tech opportunities impacted by ongoing Eskom issues and poor electricity infrastructure across Africa?
Yeah, I think there's no doubt that, you know, I think everything, we all need electricity. But if you look at solar energy and what a lot of organizations are powering themselves up with now is alternative forms of energy. I see KwaZulu-Natal government now is trying to go 100% solar and completely off the grid. So I think over time, you're going to find more and more, I see Elon Musk battery company has reduced their prices quite significantly, the Powerwall. So I think what we're going to find is people are going to be less and less reliant on Eskom's electricity, and there's going to be alternative forms of energy. But right now, for us as digital platforms, where we're using our mobile phone, and hopefully we've got these little chargers we can charge them up with, it's not really impacting us. And all the big data centers like Amazon Web Services or Microsoft or Google have got huge backups in the event that Eskom does go down. So it doesn't necessarily impact directly on the digital platforms. It definitely has an impact on any of our companies and any companies in the digital space that I'm aware of, but it's most definitely impacting the bricks and mortar and the retail companies and the manufacturing companies. Unfortunately, they just are not off the grid yet, and they're still relying on Eskom electricity.
Then we had a question from Toby asking on why you have omitted biotech from your top 10. There's been an explosion of gene editing and other biotech innovations recently, which is set to explode further.
Yeah, it's a great question there, because I had to take about 15 or 20 and sieve them down to 10. And I think biotech was probably number 11. So it's not that it's not important, it's absolutely important. So the 10 don't mean that the 10, in our opinion, the 10 most important, but there's no biotech. And again, you need for biotech to really work properly. And I'm not talking about extensive capital outlays here, because I'm talking about venture capital opposed to private equity, which is typically where you get in the biotech space. But health tech, biotech is definitely an area that we're on the lookout for. In fact, we've actually got a health tech company that we're looking at right now. The biotech most definitely is a very, very prevailing fourth industrial revolution, but it is capital intensive, and it does require very, very fast networks to actually enable the technology to work.
Clive, there was thanks for your insights. And how do you feel the quality of these technologies compare with those being created in other countries?
I think, in all honesty, guys, what we don't have in South Africa, we don't have the amount of capital that they've got in places like Silicon Valley. So if it's a biotech, as an example, that's solving cancer or whatever it might be, we don't have the capital in South Africa to solve those sort of problems. But if it's a digital platform like an Uber or something like that, I don't think we are behind the rest of the world. I believe if it's capital light, it's capital efficient, I think we are on exactly the same trajectory as them. And I think when we talk about our 6 companies now, you'll see all these companies are going to go global now, because we are competing on a global stage. We're not competing on a local stage, we're competing on a global stage. So where there's lots of capital required, we cannot compete, we don't have the capital. But where they're digital technologies, specifically where they're capital light and capital efficient, I believe we're competing, punch for punch with anywhere around the world.
Clive, there were a few more questions on a little bit on the dividends growth and also about the new fund. Maybe we should address those also in the next segment.
I'll do that. Lord, if I don't address them, please come back to me after I've gone through this section, and then we'll answer those questions then.
And then we've got, what about the current 5G offerings in SA? Are those companies offering 5G on a low scale? We've got that as a question. And what have you seen in the tech space in terms of innovation and disruptive service offerings, which you feel which we shouldn't be considering? I think that's it.
Okay, great. I think just that 5G question, I mean, there's no doubt we are not getting the true 5G in South Africa yet. For one, we have very few phones that are actually 5G compliant. And secondly, there's not enough mass yet out there that's giving you full 5G. So there might be certain areas. But just for the audience here, 5G, where broadband and 4G, you mainly got 200 megabits per second. Yeah, we're talking about a terabyte per second. That's true 5G. If you're really going 5G, the best 5G in the world, you're getting 1 terabyte per second. Now just think about the speed of that is just mind-blowing. And we are nowhere near that true 5G yet. I think the second question there, let's answer it a little bit later after we go through the second part of the presentation. So thanks very much for those questions, attendees, and please continue with the questions. I'm now going to talk you through how the fund, so just to remind you, if you're not familiar with Kalon Venture Partners, we're a digital disruptive tech venture capital company. So we invest in payments companies. We invest in those digital technologies that I've spoken about earlier in my presentation today. We have made 6 investments, and we're about to make our 7th and potentially our 8th within the next month or 2 months. And we're going to go through those 6 companies right now and talk about how they're performing and what's happened to the share price since they started performing. But let me start first with next slide, room. So just quickly, we believe that probably the most experienced management team and board in South Africa in venture capital. So just to quickly from left to right there is Roman Kamala, ex-CEO of Vodacom, who's our non-executive chairman. I've spoken about myself, the ex-CEO of Accenture South Africa. Laurent, an ex-entrepreneur who's the COO. We've got Gil Spurling, who built a marketing business, a Facebook marketing business, the only Facebook marketing partner in Africa called Pop Media. and he exited that business with his partner, Dan, who will be talking about Flow, the next company, in the next few minutes. We then got Arnold Basarabi, who was the ex-CEO of Fetcher. He also sits on many, many boards and a very, very experienced and established businessman in South Africa. Eddie is a man close to my heart because when I was at Arthur Andersen, he was also at Arthur Andersen. And I think he spent 21 years at Arthur Andersen. I spent 28 years at Accenture, and Accenture was the disbandment of Arthur Andersen. It became Accenture for the technology side of the consulting side of the business. So Eddie, a very established businessman, Arthur Andersen for 21 years, and has been in financial service for many years and sits on many boards as chairman and non-executive director. Got Nicholas Liebman, who's also an established businessman, who's the co-founder and the CEO of Kalon Private Equity and Asset Management. We've got Fatima Habib, a very well-established businesswoman in South Africa, and she's also very highly known for her knowledge in education and working with governments in education and doing a lot of social type of work in helping organizations in South Africa and abroad actually grow. And last but not least, we've got Gil Oved, who's the co-founder of Creative Council. And Gil exited his business for a big number. You can go and Google that. And so Gil, and Gil has now started with Romeo a private equity company, and also again a very established entrepreneur and businessman. So over 200 years experience that we can turn to and manage your capital, the capital that hopefully you invest in the fund. Next slide, Laurent. So just for those of you that, and I'm not going to ask for a show of hands because we've disabled that, but I'm assuming now that you know what Section 12J is, but I'm just going to go through the slide very briefly. Section 12J was promulgated by National Treasury in 2009. And what it was about, it copied actually something in the UK called venture capital trusts, which enabled high net worth individuals or individual taxpayers to make an investment into a VCT or into a Section 12J company that they could get 100% deduction from their taxable income. And the reason they did this was to stimulate economic growth and stimulate the investment into SMEs. And that's really when we started 6 years ago, when we started Kalon, was about our ability to raise this capital and invest in these companies that we could take them from being smallish to medium-sized companies and help them scale into South Africa, Africa, and globally. So just as a way of example, just an example that if you're an individual or trust and you invest R1 million, typically if you are at the 45% marginal tax rate, you would pay 450,000 Rand to SARS and you'd have 550,000 Rand in your back pocket. If you invest the R1 million in a company like Kalon or a Section 12J, your whole investment, your whole million is deducted from your taxable income and you save yourself 450,000 Rand. So in this case, where it's 45% effective tax relief, if you're on a lower tax barrier, you would then save that amount of tax. Now that's for an individual. Corporates would save, if you invest as a corporate, same thing, you invest R1 million, you get 280,000 tax relief, and your actual investment into the fund is R1 million, but you get 720,000 Rand, 280,000 Rand of that is paid for by SARS, or in this case, 450,000 Rand is paid for by SARS. So there's a max on that as well. So we'll talk about it later, we are accepting anything from 70,000 Rand to 2.5 million for individuals and 70,000 Rand to 5 million for corporates. There is a catch, however, you have to hold your investment for 5 years. If you do not hold the investment for 5 years, so if you invest now in February 2021, at February 2026, after that time, you can sell your shares or we can pay you back your capital and you will not be taxed on that money that you saved. There'll be a capital gain event, but not a taxable income event. If you do sell your shares prior to the 5 years, SARS would recoup that tax, and in this case, the 450,000 Rand or the 280,000 Rand if you sell your shares within a 5-year period. So that's at a very high level. There's a lot of detail around that. Please post your questions if you want more information about 12J, or you can contact Ron and I. We'll give you our details later, and we can talk you through Section 12J. But it is one really legitimate way of saving tax and putting it in and investing in these type of companies I'm going to talk about now, and being part of this fourth industrial revolution and saving tax at the same time. Thanks, Laurent. So now I'm going to go to before we go to questions, I'm going to go to the investee update. So that's these are the 6 investments we have in our fund 2. So anyone investing in before the end of February 2021, so that's in about a month's time, will get already access to these 6 companies and the new companies we invest in as well. Next slide. So I'm going to start with Ozo. Now, unfortunately, Thomas Pays, who's the CEO of Ozo, is not available today, but he has kindly cut us a video clip, which we'll be showing you in about 10-15 minutes. So Ozo is I'm sure many of you have used Ozo, but it's a payment solution for buyers and merchants that allows for secure and instant payments on all smart devices and desktop devices. Just something interesting about Ozo that you might not know is there's basically about 4 million credit cards in South Africa and about 25, 26, 28 million bank accounts. So basically there's every one person having a credit card, there's 7 people that don't have a credit card that have a bank account. Now, if you go into Takealot or any ShopRite or Pick n Pay or any of these internet sites that you want to pay for, there's 3 ways you can pay for it. You can pay for it via a credit card. If one of those 4 million has got a credit card, you can use the credit card. You might be able to pay for it via debit card or electronic funds transfer. And Ozo is the electronic funds transfer. So Ozo is really enabling people from previously disadvantaged backgrounds who have a bank account but don't have the financial muscle to have a credit card, enabling them to transact on thousands and thousands and thousands of internet sites right across the country and right across the globe. So just some highlights. You'll see on the right-hand side there we've got unbelievable. We're seeing at more than 4,500 merchants already. So most of the merchants you'll probably go into, including MTN, Vodacom, ShopRite, Checkers, etc., Takealot, Superbalist, you'll find the option of using an EFT, and the EFT is Ozo. There are quite a few EFTs in South Africa and globally, but Ozo is the dominant EFT by quite a long way. So just briefly on Ozo, we invested at Ozo at about an average price of about 250 million. And the revenue at that time was, Thomas will say 10 million, but we checked, it was about 15 million Rand was the revenue when Kalon invested in the company about 3 years ago. The revenue this year will hit roughly 100 million from the 15 million Rand we invested in 3 years ago. So 6-7x on the number we invested in. They are currently on a capital raise, and I can't tell you the actual amount, but it's an order of magnitude more than the value that we invested in at the 250 million that I just mentioned now. But Thomas will give you an update in his clip in a few minutes' time. So another very interesting stat about Ozo. So the first billion Rand through the platform. So getting 1 billion Rand, people actually, what we call gross merchant value. They're buying something from Takealot for 1,000 Rand, that's gross merchant value. And then Ozo gets a piece of that 1,000 Rand. They just bought something on Takealot. So that it took 2 years, 9 months, and 19 days to get to our first billion Rand of gross merchant value through the platform. So let me repeat that. 2 years, 9 months, and 19 days to get to that first billion. In November, it took us 26 days. So we moved from 700 days to 26 days of getting to a billion Rand. We hit our first billion Rand in processing in November. We hit 1.1 billion. We hit the 1.1 billion again in December. And we're on track to hit the 1.1 billion again, over 1.1 billion in January as well. So this is the best 3 months. And the company continues to do double-digit growth every single month. So you can see on the slide on the left-hand side, 120% payments process value up in the last 12 months, 125 million transactions processed. So that's how explosive this technology is, EFT. 25 million transactions in the year, 10 billion value of process, but 1 billion in each of the last 3 months. And as I already said, 4,500 total merchants. But you'll hear from Thomas talking more about the Ozo revolution. And this has just been an unbelievable success story. And we've got a lot of interest from local investors, overseas investors. But as I said, you'll hear from Thomas later. Next slide, Leroy. The next company is a company called FinChatBot. I spoke a lot about chatbots and artificial intelligence, conversational chatbots. So FinChatBot really is an AI, artificial intelligence powered chatbot for the financial services industry. So we've got, it says in the bottom left-hand corner, it says 20 financial service providers, but we've actually got probably the top 25 financial services providers in the country we're doing work for, from the Mileways to Dial Direct, TFG, the Fed Group, Hollard, Bidvest Insurance, Investec, Bright, MTN, Momentum, etc., etc. We saw revenue growth 96% from Q4 2019 to Q4 20. Our average contract value went up 110%, and we've done over 5 million quotes. So basically, let me give you a use case example. I go and take my Nedbank card or whatever card it is, and I go and buy travel insurance. Bad example, probably because of COVID, but automatically I'll get a WhatsApp message or an email, but through a WhatsApp, and it'll say, click on the link. I'll click on the link and it'll take me through a bot and sell me travel insurance. So there's no human intervention for the client who's ever sold the ticket to actually get travel insurance. It's completely automated, and it's done through this artificial intelligence, which keeps on learning and gets better and better and better as time goes by. What's very exciting for us, during the last couple of months, we raised $1.5 million for our European expansion from a number of French, Portuguese, and a number of different investors, some all European investors, but some focusing on the African market, West Africa, East Africa, and many focusing in Portugal and France and other parts of Europe. So the CEO, Antoine Palissard, has gone off to Portugal, and he's very, very close to closing our first few deals, both in Portugal and in France as well. And we've also got an operation we're looking at setting up in the UK as well. So great growth in South Africa, but we felt it was the right time now to introduce our technology to the European market. And someone asked that question earlier about how do we stack up. I think what we confirming from these clients, we stack up 100%. They have not seen the type of technology and the AI that we've developed here from other competitors in the European landscape. Next slide, Laurent. The next company is Flow, and we've got Dan, the co-founder of Flow and co-CEO of Flow, who will be talking more about it just now. But Flow really is a prop tech company that goes straight to the source of the largest social media platforms in the world. Prop tech, I mean property technology, but Dan will talk more about it later. The company is really starting to see some fantastic traction, and you'll see on the right-hand side there, and Dan will talk about it, but we've got from agents to realtors to a whole lot of different people in the property real estate market, from people who want to rent their property, people who want to sell their property. We've seen in new clients about 70% month-on-month growth, 30% month-on-month revenue growth. Now you can work out 30%, not per annum, per month. This is how fast this company is growing. We've got over 10,000 buy and seller leads generated for properties. Remembering what Flow is doing is matching a buyer to either someone renting a property or selling a property. But again, Dan's going to do a lot more justice than I can do in his presentation in a few minutes' time. Next slide, Darun. Senmark, Graham asked the question about cybersecurity, and I'm going to let that answer be answered by Sasha or Sam later on. But what Senmark does really is making phishing and spoofing impossible from your URL, from your internet address. So basically it makes the internet a safer place by preventing what happened to me in December, where I lost that 14,000 Rand. Look at the bottom left-hand corner. We've seen about 1,000% MRR, which is monthly recurring revenue growth since January of last year. So 1,000%, and 10 times monthly revenue, recurring revenue growth. And the team is about 14 teams. We process about 1.3 billion emails analyzed per month. That's 32 times since January. We've already got, or the team will talk more about their distribution partners. Most of the major distribution partners in South Africa, EOH, Ultron, Dimension Data, etc., are our distribution partners for this technology. They've already closed in 1 year since they finalized the technology, but closed over 141 active clients and 605 customers on trial. So before a customer converts to an active customer and a paying customer, they go on trial. And we've got over 3,300 domains on Senmark already. And they've already got some clients overseas, and they're establishing partnerships, as you can see there, in the UK, the US, Germany, Chile, Argentina, and other parts of the world. So we've got a world-class technology here, which is competing with the best cybersecurity companies in the world. But Sasha will be talking more about that in the coming few minutes. Laurent? Greg, the CEO of Mobus, will be also talking about Mobus. So Mobus is a smart SMS solution. And really, it's really about super personalization of the SMS that you get. We all get SMSs every day, but most of them just take you to a dumb landing site. What Mobus does, it actually, if it's got 100,000 emails, you can have 100,000 different landing sites because it's hyper-personalized. So let me give you an example of that. If Laurent is a great golfer and I'm a boxer, so if Sportsman's Warehouse uses Mobus, what will actually happen was they will see what my buying patterns are, and they'll send me the latest boxing gloves or boxing bags, and Laurent, they'll send him the latest golf equipment or whatever it might be. So it gets hyper-personalized depending on who you are, using all different technologies to do that in the background. Greg will talk about how fast we've grown. So we've grown Mobus. When we came in, it was doing last year, it says previous year 19 million, but last calendar year they did about 17 million. And this calendar year, the one that just finished, with 64 million. So from 17 million to 64 million, about a 250-300% growth year on year, and about 240% growth calendar year on calendar year. He'll talk about going live with Telkom Yellow Pages. It's got about 20,000 SMBs, and we've closed our first customers in the USA. And we're doing a big capital raise now at about a $4 million raise at a significantly higher price than we paid, and that will be for our expansion into the US. And just the last point about Mobus there, they sent about 700 million SMSs, smart SMSs last year, and the SMSs are zero rated. So what's nice about this, if you're a customer, and we don't understand there's millions and millions of South Africans that don't have data on their phones, it doesn't matter. They can still access the landing site. They can play around. They can do whatever they want on the landing site. And we actually have deals with the telecommunication companies to offset the amount of data they use when they land on that personalized site. But Greg will talk more about that in a few minutes. Laurent? Last but not least, this is our most recent investment, about 3-4 months ago, or maybe 5-6 months ago. But what CarScan does, it is an augmented reality and AI and machine learning based app, which helps to buy, sell, rent, service, insure, finance, and audit cars by reducing risk, fraud, and governance in the industry. So let me give you an example of what CarScan does. I'll help you understand it. I had a bumper bash just before COVID, probably the end of 2019. I had a bumper bash. Now, typically what happened with my bumper bash, I contacted my insurance company. They told me I must go to see 3 panel beaters and get 3 quotes, send them back to them. They'll then send an assessor, and they will then decide which company is going to do the work. Now, that took me about 2 to 3 weeks just to get the assessor here to my place, get them to look at my car, and actually get it out to a panel beater. The other problem that I experienced, which is I found very interesting, I'd never noticed before, but when I went to the panel beater, the same panel beater gave me 3 quotes from 3 different companies. So all these panel beaters, there's so much fraud in the panel beating business that they have multiple invoice books, and they just give you 3 quotes, so you can send the lowest quote, which is their quote, to the insurance company. So how does CarScan solve that problem? So what you do with CarScan, you'll automatically get a link from your insurance company. It'll use its immersive technology, augmented reality, to walk you around the car and take a 360-degree view of the car. It'll take a picture of your license disc. It'll take a picture of your VIN number, or see the VIN number from the car, lift the VIN number from the car. But it'll actually use high enough images and quality that can go straight, and then automatically it will send it to, they've got about 500 panel beaters on the platform at the moment. It'll send it to the 3 closest panel beaters from where you've had your bumper bash. And literally within 1 hour, without the need of an assessor, the insurance company would have told the panel beater, you can fix Clive's car. So if I had that technology 1.5 years ago, I would have done that in an hour, opposed to 2 to 3 weeks of getting that problem solved. So we are in numerous discussions. We've just got Cars 45 is owned by Naspers. It's the biggest buy-sell car online automotive site in Nigeria. And we're just going live with Cars 45 at the moment. We have gone live with Motus, which is one of the biggest South African insurance companies and automotive companies. They've got about 500 dealerships in South Africa as well. And they're using CarScan for numerous tasks. One is the 360-degree technology, where we can take a picture of the car and they can then put that 360-degree technology on their website for people to look at the car, not just as pictures, but do an immersive look at the car from a 360-degree view. We're partnering with Unipol, which is a global company which provides services to the automotive industry, and they haven't got technology like this, and they haven't seen this before. You can see there we're doing at the moment numerous proof of concepts, and we're in discussion on global distribution, Germany, West Africa, and Europe. In fact, Obens, the CEO, and I had a call with one of the top venture capitalists in Europe yesterday who invest in Africa and Europe. And it was a very, very good call about us raising our next round of capital, which will probably be in about 6 months' time. Working with BCX, Dimension Data, Deloitte, Tracker, and many, many more companies. The 10 million rand was invested between Kalon, a company called Launch Africa, which is an African seed investor, and the IDF, which is Telkom's Enterprise Development Fund and other enterprise development funds as well. So this is really a very, very, very innovative, deep technology that definitely nothing like this in South Africa and hardly anything like this around the globe. And we've actually stopped any new customers because we just have too much demand right now, and we're starting to scale up the team and for the scale up of our going live in Nigeria as well. So please ask any questions you have about this. We don't have Obens on the call here today because we just didn't have enough time. But that's typically what Carscan does. We're doing, with our POCs, we're already doing about 5-6 million rand annual run rates through the platform. And we're looking at being at about 1.5 million to 18 million rand by the end of the year. And just based on the pipeline and the interest that we've already closed, we should hit those numbers. Thanks, Laurent. So guys, so that's really our 6 companies we have in our Fund 2 portfolio. Anyone who invests in February now and gets a tax benefit will own a piece of those 6 companies. And we are going to invest more in some of those 6 companies, and we're going to invest in new companies. As I said, we are investing in an education technology company right now, and that will be closed. We just signed the term sheet today, and that will be closed within the next, well, let's just say the end of February, we would have closed that investment. So the share price as at February 2019 and 2020 was 1,100 Rand per share. And our current share price, excluding capital gains tax, is 1,502 Rand, but including capital gains tax is about 1,400 Rand. So you can see there at the bottom there, if you invested in February 19, your actual return, including all taxes and rebates, is 33.2% for February 19 and 77.3% internal rate of return. So that's per annum return of 33.2 and 77.3. But a more accurate number is after tax and after, so not taking away your tax, your gross investment and excluding individual tax and company CGT. If you invested in 19, you're sitting at a 16.8% IRR. And if you invested last year, you're sitting at a 36.4% IRR. And that's based on your gross investment. And I think this is very important. So we're raising now at 1,400 Rand per share, and our minimum investment, as I said, there's 70,000 Rand, which is for 50 shares. So we have really opened up from our minimum of 110,000 last year to 70,000 because we've had a lot of interest from investors saying they really want to own part of this new disruptive technologies, but they haven't got the 100 or the 140,000 to pay in 1 year. So we've reduced that to 70,000 Rand. We've currently got about 400 investors in our fund, and we hope before the end of February, where you'd need to make this investment, we hope we have a couple of hundred more investing in this portfolio of companies that we've spoken about today. Just the last point in the bottom, our targeted returns is as a 30 to 38% internal rate of return over 5, 6 to 8 years. So understand it's per annum. So it's 30 to 38% per year on that 30 to 38%. So it's cumulative growth opposed to ROI. We're not talking about an ROI investment here, a return. We're talking about an internal rate of return, which you're looking at between 30 and 38% over 5 to 8 years, but probably more likely over 6 to 8 years. But being in the tech space, we don't make commitments to this. We don't make commitments to paying dividends. We pay dividends when we sell the company. So once we sell a company, we'll pay the dividends as profits through to our investors. If it's after 5 years, we'll pay the dividends as some of it's capital and then some of it as dividends as well. But if you sell a company within 5 years, we would pay you a dividend, which would be the profit from the company and not the capital gain portion. So you're not taxed within the first 5 years of the investment. I'm sure there's lots of questions around this, but please put them on the Q&A and I'll answer them once we're done here. Next slide, Laurent. So that's it from me, everyone. I think it's, I hope everyone's, I'm sure there are lots of questions, but what we're now going to do is hand over to, first and foremost, we're going to listen to a video clip from Ozo. We're then going to hand over to Dan to talk about Flow, Sasha to talk about Senmark, and Greg to talk about Mobus. So, Laurent, if you can just play the clip from Thomas Pays, the CEO of Ozo. Leroy, nothing there?
So hi everyone, my name is Thomas Pace. I'm the CEO and co-founder of Ozo. Ozo is a fintech company that specializes in automating bank-to-bank payments in South Africa and Namibia. We were established 6 years ago and met with Clive Butko and the Kalon team for the first time in 2017 when we're basically doing our seed extension round. So we've been very fortunate to work with Kalon for quite some time over the past few years and also benefit from an incredible successful story through our journey, working closely with the Kalon board and team in making sure that we make Ozo a success, not only the one that it is today, but one that can continue to grow in the rest of Africa and hypothetically other international countries in the future. From Ozo's success story, what has been interesting to see is how we've been able to enable South Africans to transact in a different manner or empowering them in a way that they were restricted to. One of the Unfortunately, only 1 in 8 South Africans have access to credit card. The beauty about bank payment that also empower is that it allows us to allow 7 out of 8 South Africans to be able to transact online or at point of sale and avoid basically having to deal with cash, which in terms of crisis like we are going through right now can actually not only remove the risk but also save life. We are at a stage of the business where we are now embarking on a Series B raise, where we are about a third way through and should have it concluded in the next quarter or two. We've been able to scale quite drastically from a revenue perspective year on year. We're about to end another record year, which should basically see also closing the financial year 2021 with a revenue close to 100 million, which is kind of interesting because if I remember correctly, at the time where Kalon invested in our business, also had barely passed the mark of just over 10 million in revenue. So it just shows you the flair that the Kalon team has to find the right investment, back them up, and also empower them and their team in achieving incredible results. I think what this means also is to date we've been able to empower millions of South Africans to basically now start transacting online or at point of sale or in many other forms. We've really recently in September launched Ozo, which is basically a progressive web app that is going to empower the low LSM in South Africa, in rural area and township to be able to transact in a better digital way. And we made it free from a data cost perspective so that there would not be any restriction for anyone to access. The reason we launched this is because as much as we've got millions of consumers using us, we also have in excess of 120,000 people joining Ozo for the first time on a monthly basis. So we want to be able to provide a platform that's going to support our users even better. As much as today they transact on average about 6 times per month, we want to see how we can empower them to use it and do so on more of a regular and daily basis than current. So, I mean, today the Kalon team and the board of directors of Kalon has been really exceptional in supporting us. We are very fortunate every time we have a question or a problem to be able to, from a phone call away, email, be able to immediately set up a meeting and gain the availability of the team as well as Clive. It's been really great to be able to, speaking about Clive specifically, gain the knowledge and experience of someone that grown and assisted hundreds of tech businesses to scale to where Ozo wants to aspire to be in the next 3 to 5 years as a multi-billion-dollar unicorn. But not only Clive has been key. Obviously, the extended Kalon team and the entire board has been an absolute key success of the Ozo journey today, with the support and enabling access to pretty much anyone in South Africa when required. In a summary, we're looking very forward to the year ahead. We should be on track to be able to increase the current growth that we've seen last year of an average of 7% growth month on month, which should easily basically see us this upcoming year achieving over 240 million in revenue. Should anyone be interested to engage with me or the rest of the other team, I welcome you to contact me directly. My email address is thomas@ozo.com, or alternatively, I welcome also anyone to go onto our website, www.ozo.com, should they require any further information. Thanks for everyone's time, and look forward to engage further.
Okay, thanks. That was Thomas from Ozone. If you've got any questions, please once again post them. I'm now going to hand over to the co-CEO of Flow Living, Daniel Levy. Thanks, Dan.
Thank you. Liron, am I good to share?
Yep, go ahead.
All right. Afternoon, everybody. Just a quick check. Can you see my screen? Liron?
Yeah, perfect. Thanks.
Cool. Thanks. So I think a bit of background over here is just required just to give some kind of context to Kalon. They notorious for backing good jockeys, I think. I've had good experience in the Ozo realm, being a seed funder of that business myself, and sitting on the board with Kalon for a couple of years. Incredible business that's had amazing growth over the years, and some real great insight from Clive and the team. I think equally so, Clive's notorious for rolling up his sleeves, and we all appreciate that all the time. From a bit of a background point of view, in terms of myself and my partner, we come from different industries. I'm an ex-commercial attorney, and Gil's an engineer. We had a third partner at the time who was also an engineer. In 2007. We all left our respective businesses and kind of took off the back of Facebook in its real infancy. This is just an indicative slide from our presentation in 2008. Facebook was really tiny, 61 million global users. We used to use this slide to try and give it some kind of gravitas. That Microsoft had invested 240 million Rand for 1.6 of their business. Long and the short of it is, we took a gamble on what it is that we were trying to do over there. And essentially we built a tech system and an ad tech system, which today is very commonplace within the Facebook realm. But what it is that it effectively did, and the relevance of this is kind of how it relates to Flow, is you could buy ads within Facebook. We would collect data through competitions, and we would post that data within Facebook's newsfeed, which was kind of the holy grail at the time. And Mark Zuckerberg was not notorious for allowing people to do that. This product actually only was released by Facebook in 2011, but we had built tech to do that in 2007, and we were naturally reporting to our clients as to what that all meant in trusted referrals, etc. at the time. That business, thankfully, once we knew and understood what it is that we were doing, became what we call a Facebook marketing partner, one of 40 such companies in the world and only one in Africa. And we became the largest buyers of Facebook media inventory in Africa. And over the tenure of our running that business before we exited it, we actually paid Facebook over R500 million. So literally, I mean, our first client was American Swiss at 30,000 Rand. So we really knew and understood that space and grew quite a formidable business. And as I say, we exited that to a French listed group, Publicis, in 2015. I served a bit of time over there. And while we were looking for our next big thing, we started to learn and understand that there are obviously other sectors within the industries or verticals, if you will, that required disruption. Property, probably the last Bastille that hasn't been disrupted to this day. You know, just signing a lease or buying property is the same today as it was 100 years ago. And through that process, we started to kind of unpick different sectors of the market and what we wanted to do. In 2019, we launched the business as a rewards platform for tenants, essentially allowing landlords to reward their tenants and try and get some level of retention. We built that in an app format, kind of always use the analogy of what vitality is to discovery, flow was to tenants. It was a noble quest, and in a very short space of time through our background at Popeye Media, we got to about 100,000 tenants using our app in a very short space of time. The problem with, you know, what entrepreneurs learn quite quickly is, well, where's the revenue and who's prepared to pay for what? What we started to understand is as good an idea as it was quite difficult to get landlords to pay for the product. Towards the end of 2019, beginning of 2020, we started to move the business into search realm, effectively matching tenants with landlords. COVID hit, the industry went into shutdown, and being agile entrepreneurs that we are, we started calling literally all the estate agents to try and figure out what their issues were. Within a very short space of time, we identified a massive opportunity that these guys and that industry had really lacked any kind of innovation within the social media arena. That created a massive opportunity for us. July last year, just as lockdown kind of opened up, my partner and I moved into a coffee shop. We were the only ones there in a boardroom, and literally threw all our assets on the respective glass around us to try and figure out how it is we could take advantage of what was going on. And literally 30 days, day in, day out in that room, allowed us to identify what flows become. In August last year, we launched to the property industry Flow as a PropTech marketing platform, using all the assets that we had kind of garnered over the year and a half prior to that. And we knew and understood that if we were going to build revenue for our clients, this was the way in which to do it. So Flow today has seen enormous success in a very short space of time. Effectively, what our platform does is it removes the dependency on paid-list portals and use the largest social platforms in the world to find people and match them with properties. We deliver a large volume of qualified leads faster and more cost-effective than anybody else in the market. We built technology to drive this, and there's been massive uptake within a very short space of time. For those of you that are digitally inclined, this pie on the right over here, 15 years ago, would show that most companies around the world were spending their money on TV and radio. This is just an indicative view of how that's changed over the last few years, where amongst the top 100 brands, the largest brands in the world, 52% of their budgets are actually spent on digital channels. And within that channel, 60% of that money actually goes towards Facebook and Google. So the notion when we've been speaking to estate agencies is, rather than spend your money on incumbent platforms, P24 and private property, why don't you go to the largest sources of data in the world, social platforms and Google, and our tech allows us to find people and match them with property, and that has resonated with them very thick. Again, from a social media point of view, again, these platforms are just enormous. 23 million people on Facebook, 8.5 million odd on LinkedIn, and people are coming to these platforms for 4 hours on average on a daily basis and returning 70% of them every other day. Again, what are we solving, Novi, and what's the problem? I'm sure you all drive around day in, day out, and you see estate agents' heads on street pole ads, on dustbins, and various other things. It's not a measurable medium. And equally, if they're looking to attract buyers, it's such a competitive industry. You really don't know who to turn to. And what we're assisting this industry in doing is actually driving hot leads into their world so that they can consummate deals, be it leases, selling property, procuring more stock. How big is this market that we're going after? So there are about 5,000 estate agents in South Africa, kind of tiered on this basis. So this would be 5 of the top largest brands have about 200 franchises within each of those brands, equating to X amount of offices within those groups. We've averaged, they probably spend about 25,000 Rand a month across the board on different marketing measures. Each on average has about 6 offices and lists X amount of properties. So amongst the top 5 largest groups in the country, they've got about 60,000 properties that they list a month. The long and the short of it is there's probably about 125 million Rand being spent a month amongst the 5,000 estate agency brands in South Africa on its own. So 1.5 billion Rand industry, that's just on one slither of one of the product offerings in which Flow operates in. So that's a very exciting channel and something that we are getting our hands on very quickly. As I said, we launched this product in August last year. Within the last 5-6 months, we've been able to garner a plethora of different clients and really traverse the entire property sector, from owner-managed properties, funds, mom and pop estate agents, to student accommodation to auction houses, etc. Recently, we just signed a deal with a company called Prop Data. Prop Data is the largest syndicator in South Africa. Basically, they've got access to half the estate agency market. 2,500 estate agencies are their clients. We've just done a deal with them to proliferate the Flow offering, which will hopefully allow us to take on that market very quickly. And equally, it's our intent to find different partners like this all over the world, which will allow us to do exactly the same thing. How does our tech work? I think this is quite cool and relevant. What we've done for estate agencies is very simple. We take every single one of the listings and stock that they have. Our technology sucks it into social platforms. We've got smart algorithms that are essentially there to find people, which is exactly what they do. We rely on the tens of thousands of engineers that are at Facebook, Google, etc. We pull those leads into a bespoke environment that's essentially exclusive to that specific estate agent, where they house all their stock, meaning that for every lead that we bring into the environment, that lead has a chance of landing on any of their specific properties. That is all happens on the fly in real time. We report on that, but most importantly, that information passes to an estate agent immediately by SMS, email, and the like. The agent can hit this link, it opens it up in WhatsApp. There's a canned response where an estate agent can start engaging with a lead immediately. I'm sure many of you own properties or have been on the receiving end of estate agents. It's not essentially an environment where people, get on the horn immediately. And what we're trying to solve over here is, when you're dealing in the call center environment, the best time to actually close the leads in the first 5 minutes, and there's a deterioration of closing that lead 10x for every 5 minutes that you wait thereafter. So again, we're trying to bring efficiency into their market. Again, the technology over here is designed to essentially pre-qualify those leads. So we want to know if a person has intent on moving now, a month or two, etc., building out CRMs for estate agents and trying to really put them in a position where they can really close deals and procure more stock all the time, equally on the sales effort side of things. Spoken a bit about the dashboard. Again, this is all bringing data to the fingertips of franchisors, principals, and really allowing them to understand how agents are operating all over the country. And then equally, I spoke a bit about this. There are many different ways in which we're solving problems and trying to go after these budgets, these media budgets that these guys have, where they're spending that on effectively mediums that are no longer relevant to the market. That's us in a nutshell. Again, I think just to wrap that up, Kalon has been, as I say, very hands-on, particularly in our business. We understand, having built a previous business, we try and go for the top echelon of guys that can really build out networks for us quickly, fast. They've also been the catalyst of introducing to 2 other VCs that came on board in our business over the last 2 years. So very good synergies, meeting of the minds, great investments. Thank you very much.
Thank you, Dan. Much appreciated. Just what Dan was mentioning there is we have another local venture capital company invested in Flow. And in addition to that, we have a New York-based venture capital company that's also invested in the company. So we have 3 investors in total. So Lauren, if you could please go back to the main slide. So I'd just like to introduce you to the co-founder of Senmark, the cybersecurity company, Sasha. I never get that name right, so I'm not even going to try and pronounce it. But I'm going to hand over to you, Sasha, to talk about the great work you guys are doing on Senmark.
Thanks, Clive. You can hear me, Clive?
Perfectly.
Super. I'm going to also take over the screen share now. Let's have a look here. Right. I'll do that. So hi, everyone, and thanks, Kalon, for this opportunity and for the support. My name is Sasha, as Clive mentioned. Matulovic is my surname. It's Croatian. No one can pronounce it. I'm from a company called Senmark, and our purpose at Senmark is to make the internet a safer place. Now, the internet is not always a safer place. So we're going to focus on one very specific problem. Sorry, I see my slides are just shooting off there. Give me one sec. There we go. We're going to focus on a very specific problem in this vast war against cybercrime, which is that right now a cyber criminal can send an email from your email address. And
Sasha, we're not seeing your slides. Just can you confirm?
Okay. You're not seeing any of my slides?
We can see you, Sasha, not the slides.
Okay. Oops, sorry about that. Let's start again. I think that Zoom just crashed on me there. Okay, let's do this.
Yep, got it.
Okay, I'm going to use a slightly different way to do this, then we know we're working. Okay, sorry about that, guys. Okay, so let's talk about the problem that we focused on. Okay, so right now, a cyber criminal can send an email from your email address. Now, they can send this email to anyone in the world, and you will not know about this until it is too late. Okay. And this technique, which Clive mentioned earlier, which is sometimes nicknamed spoofing or email impersonation, is the way that 75% of cybercrime is started the world over. And this costs the world over $500 billion a year in damages. And those damages come in the form, the first that we see the most of is deposit fraud. So this is where someone sends an email to your clients and with an invoice attached and the money is stolen. But there's other assets as well that attackers are after, like data. And when they have control of your data or are able to encrypt your data using ransomware, they're obviously after ransoms. And at the end of the day, the reputation of brands and the reputation of email is getting severely damaged in this process, where people feel they can't trust an email, even from their own bank or from SARS especially, and other big brands where email should be trusted. So emails become a very dangerous and untrusted medium of communication. And what's worse is that during times of panic and fear, cyber criminals actually ramp up their use of spoofing and impersonation to commit phishing attacks. So you'll see the curve actually almost track exactly infection rates as they leverage things like the vaccine distribution or testing or whatever the case may be as a way to attack people, innocent victims who are going to fall prey to this thing. So that's the big problem that we focus on specifically. Now, there is an answer to this problem. So a couple of years ago, the world's largest technology companies get together and they design a standard that stops email impersonation on a global scale. And this security protocol is called DMARC. Now, when DMARC is properly implemented, you cannot impersonate the email domain where it's been implemented. And this standard then becomes adopted by the world's leading companies and governments alike, including the US government, when Department of Homeland Security passed an order forcing all departments of the US to actually adopt the standard. Same goes for Australian government, the EU, etc. So this standard has been designed, adopted, and is being enforced globally. And the government agencies for cybersecurity are enforcing it and also recommending that every single domain and owner has to follow the security protocol. Okay, so there we go. There's an answer. That's fantastic. Now, the only trouble is that it is a specialist field, and it's not so easy to get it done if you don't have the right cybersecurity team within your business. And that's where SendMark comes in. So our role is we have built the software tools and the training and certification for engineers and the IP required to roll out this standard to the hundreds of thousands of domains that require it. So we are leveraging on one hand this very powerful cybersecurity standard that is being enforced by governments and big brands. And at the same time, we are bringing the navigation and the tools and the way forward for everyday businesses to actually leverage and use the standard. So in simple terms, if you use SendMark, you stop impersonation attacks on your domain so that people can trust your email. So if you get an email from Clive at Kalon, you can trust that email because Kalon is a protected domain that has implemented the standard entirely. But unfortunately, as you'll see a bit later, the adoption of this has just begun, and only 20% of businesses in South Africa have actually started this protection. So this is the mission we are on, to protect all these businesses and implement this global standard. How are we doing on this mission? So when Kalon first invested, we raised our first round of funding from Kalon in December 2019. Since then, in the last 12 or so months, we grew 9 times. We used the capital to reach over 1,000 active customers in our business, and they include some of South Africa's leading firms in law firms like Weber Wenzel and Cliff Decker and Bowman's, and financial services companies like Bidvest Bank and Bidvest Insurance and so on. Technology companies also give us affirmation by using us. We protect MWeb and My Broadband and the like, and EOH and IOCO. And then even global organizations have chosen us as their supplier, like YPO.org, where we work with their team in Texas. Now, to get the scale and the distribution of this standard to get to hundreds of thousands of domains, we've built a distribution framework. We couldn't do it by staffing it ourselves because it requires thousands of employees. So what we've done is we've signed partnership agreements with all the leading technology companies in South Africa, and we are busy always, and always will be, busy training and enabling their engineers and their salespeople. So this way we have now harnessed a gigantic sales and implementation force that is required to get this job done. And now the work begins. So, you know, we've used 2020 to set up our distribution network and to land our first 140 customers. But now the real work begins, because when we look at South Africa and we look at the top 700 companies in South Africa, only 29% of them have even started this journey. So 70% of them have no standard in place whatsoever. And if you take the top 700 companies as a kind of sample for the other 250,000 companies in South Africa, you can see the kind of job we have ahead of us. Okay, now Germany is a little bit further ahead. So we are also working on the German market, where you can see that 1/3 of their businesses have started this process and 2/3 need help. And that's where we are going to work in Germany as well. And the UK, it's about 50% of their businesses need help. But in Germany and the UK, they have 3 million companies, so about 10 times the size of the addressable market that there is in South Africa. So we really have our work cut out ahead of us. And if there's one call to action, or if there's one kind of message we can leave you with today, is that you need to know whether you are one of the companies that has this vulnerability still open in your cybersecurity. It's really important that you know your safety score. And the way you can do that is by going to sendmark.com or sendmark.co.za, and you can test your domain. And if you get a score that is 3 or lower, it means you need help to close this security gap, okay? And you form a part of the 80%, 70 to 80% of companies in South Africa that needs to close a security gap to stop people from being able to impersonate you. So we encourage you to do that, please. And just want to finish off on just a thought that, you know, with the whole world and millions of domains requiring this security standard, and South Africa being a very capable kind of hub for deploying this technology, and because it's completely universal, our big, hairy, audacious goal is also to create hundreds and thousands of jobs in South Africa for engineers. Now, we don't see that happening in our own entity, because we want to be a software company and hold the IP, but we think that we can do a lot of work, and we've started talking to some of the big organizations in South Africa to actually create jobs and export this implementation skill as well all over the world. So that would be fantastic if South Africa could become a leader in this technology standard. And that's all from me for now. I know that there was a question regarding broad terms into broad cybersecurity, and I don't think I've answered it in this presentation. And that's because we are very focused on this very specific vulnerability. This is not a silver bullet, but this is the way that 75% of cybercrime begins. So it's very important to close this and take away this particular opportunity from cyber criminals, but it doesn't discount the fact that you need to look at all of your different measures and dimensions of your cybersecurity strategy, including, you know, whether it's on your perimeter security or you know, multi-factor authentication, strong passwords, etc. So there's a whole, you know, there's a whole spectrum of things that one has to do, and this is one of them. And we are a hyper-specialized unit that is here to deploy that. Thanks, Clive.
Thanks very much, Sasha. Really appreciate that. And yeah, well done to you and the team for this incredible traction that you are receiving, and looking forward to obviously the significant growth that you're projecting over the next 12 months. So, Lauren, if you can just go back to the main slide. Okay, so the next, last but not least, is Movis, smart SMS solution. So I'm going to hand it over to Greg to speak. I'm going to try and keep it down to 5 minutes, so it will enable us to have a few questions we can answer in the last 10, 15 minutes. Over to you, Greg.
Hi, thank you. Thanks for the opportunity. Hi, everyone. I am...
Sorry, Greg, we can't see you. Sorry, Greg, I think Laurent needs to hand it over to you.
Yeah, we can see Greg. You can carry on. Great.
Are we good? Can you see my slide?
Yep.
Awesome. Thanks, guys. My name's Greg. I'm the CEO and co-founder of Mobiz. We are a marketing SaaS that helps businesses create hyper-personalized engagement over the SMS channel. We are also the only marketing SaaS in South Africa to be completely zero data rated for consumers. So zero data barrier through our technology by working directly with Vodacom, MTN, Cell C, and Telkom, and that's super important because I think we all know that 50% of South Africans have no airtime at any given moment. So we help them increase engagement rate by at least 100%. So a little bit about me and my leadership team. We have over 30 years combined in the mobile marketing space, both in B2C and in B2B. We launched Mobiz in 2015, and Kalon is our very first institutional capital, and I suspect will be the best one going forward as well. We've also just graduated from the Alchemist Accelerator. They're the leading B2B accelerator in Silicon Valley that will really help us prime into our US go-to-market as well. So, what do you want to solve? SMS marketing has been, it's a very overutilized but undervalued platform. So what we want to do was we wanted to combine the ubiquity of SMS marketing, but the power of personalized digital engagement, and hopefully supercharge it to replace email as the de facto customer engagement channel, not just in South Africa, but around the world. And we've been able to do that for several leading consumer-facing companies in South Africa. So we made it super easy and super comprehensive for any marketers to create these engagements, or in a single whole product approach from A to Z, from campaign creation to analytics to deployment, all within our single Mobiz platform. And we've able to, well, our client by using our technology, we're able to achieve incredible results, right? So they've told us that they've got 20x more engagement than email and SMS, the existing email and traditional SMS campaigns. Over the past 12 months, several of them have achieved 4 times more sales conversion in e-commerce than Facebook and Google. And over the past several years, we've done over 500 million messages, actually 700 million messages now, as Clive has mentioned. And all of those, we've got an average click-through rate around 15%. Just to give you a bit of context, email is around probably 0.5%. So it's a lot better. We are tried and tested. We serve many of the leading consumer-facing enterprises in South Africa through different verticals, from home choice to multi-choice. They use our channel as the de facto channel for direct customer engagements. And with Kalon's help, and specifically Clive's leadership, I mean, in mentoring, I can't say this enough, but Clive is a one-man sales army, and he's probably brought us more leads than any one single sales in our organization. And with his help, we're able to grow our revenue from 17 million rand in 2019 calendar year to just over 63 million rand over the last 12 months in 2020, and that's of course through the pandemic. We currently have about close to 5% market share in South Africa. In South Africa, the direct marketing engagement industry is about $100 million in South Africa, but in the US, where SMS channel has largely been underutilized, and it's actually becoming a waking giant. That market has an $80 billion market. So if we can do just similar 5% market share over there, we'll easily become a dollar-based unicorn, and that's our goal coming into 2021. And so what are we going to do in 2021? We've seen significant rise of e-commerce, specifically in the SMB space. And so we've been creating, what we've been busy with for the past 8 months is, making 5% of the most utilized function in Mobiz, and made extremely simple to be utilized and self-onboard by SMBs. And we'll be launching this product in South Africa with the partnership with Telkom, reaching their consumer and small business base of between 20 to 50,000 businesses. And then we'll also be launching this into the US space from our learnings and experience in the past 6 months with the Alchemist Accelerator. We're glad to say we piloting with a handful of agencies in the US, and we just signed our first US customer just 2 weeks ago. What are we doing now? We are raising $4 million go-to-market capital with our Series A to launch our self-onboarding SMB into the enterprises specifically for the US market. And we hope that this will continue our 3x year-to-year growth into 2021 and beyond. And just to say that beyond connecting us with potential customers, Clive has been extremely helpful in connecting up with VCs as well. We have a live demo experience for our upcoming products. So welcome everyone to experience the magic of Mobis on our website, mobis.co. So yeah, hopefully we'll get some feedback from you guys. So that's from me. Thank you for listening to me.
Greg, thanks very much. I really appreciate it, and unbelievable growth from 17 or 19 million to 63, 64 million. It really has been a phenomenal year, and we're very optimistic that this will continue, and particularly with the launch into the US, which, as we all know, is an order of magnitude larger market than the South African market. And we've had some very positive feedback from US investors and other people about the need for a solution like Mobis in the US market. So, Lauren, if you could just go over to the next slide, please. So just the next steps before I go to the question and answer. We have, because we are raising less than R1 million from investors, we've had to compile a prospectus which has been signed off and approved by the CRPC. That prospectus is available on our website. We will also copy that prospectus and send you out a copy of the video and the slides, hopefully tomorrow or the next day, but we'll also attach the prospectus. You also need to complete an investor mandate, which will be, you'll see that on our website. It'll support you in completing that investor mandate. You can scan and email that back to the mandate at kalonvp.com. And the deposit money is into supply. We'll provide the bank details, and you'll get your tax and your share certificate delivered to you within 30 days after closing at 12 o'clock on February the 28th. So it's very important. There was a question asked just on the chat line, how much we're trying to raise. We're looking at raising about 50 million. We will be open only until the February the 28th for what we call non-accredited investors, i.e. with the prospectus. That will close on the 28th of February. Until the end of June, which is the current sunset clause, we can only raise amounts of R1 million and above. So if you want to invest after the 28th of February, it has to be more than R1 million. We cannot take your capital if it's anything less. We will be in contravention of the Section 12J legislation. So end date will be the tax year end, 28th of February, just to repeat myself. And then if you wanted to come in after that until the end of June, it needs to be at least R1 million investment. And all this information, as you can see at the top there, my email address, cliveb@kalonvp.com, or laurentv@kalonvp.com. You can just send us an email, ask us any questions. We'll send you all the information, but please don't hesitate to shout, and we'll make this process as simple and as friction-free as we possibly can. Next slide, Laurent. So I think, thank you very much for your time. We've got about 12, 13 minutes for questions. And I think, Laurent, there's been many questions on the Q&A line. So if you could maybe just open it up and let's go through those questions. And particularly, let's focus on Kalon, the share price, dividends. Let's focus on those sort of questions that I'm sure all the current participants would like to hear about.
Great, Clive. I've just tried to consolidate a few of them. One of the key questions came in about issuance of withdrawing the investments or the ability to sell, obviously for current and future investors.
Okay, so that's a great question. I think what we make very clear in the prospectus that within the first 5 years, even though we obviously don't propose you do sell because you'll have to give your tax back to SARS, this would be a board decision. And if the board decides they would buy your shares back at whatever price that could be agreed and between yourself and the board might consider buying them back. The board could also say, no, we're not going to buy them back. We don't have the cash flow. We see all the opportunities we're going to invest our cash in, and would help you reach out to our investor base to sell your shares on the secondary market. But that will all be up to the board. And if you do need to or want to sell within the first 5 years, you would definitely lose. The new buyer would not be able to get the tax advantage, and you'd have to pay back your tax advantage back to SARS. But irrespective whether it's in the first 5 years or after that, it will be a decision made by the board and all dependent on the situation in the business, our cash flow requirements, and we can make a decision on an individual case-by-case basis. Lauren, was that the whole question, or did I miss the second part?
Yeah. And then there's another question is, do you pay dividends? So I think that was a key
So
question.
again, a very good question. So we are not, if you look at the majority of the Section 12J companies out there that will look at a targeted IRR, internal rate of return of say 16, 18%, we look at an internal rate of return between 30 and 38% because the nature of disruptive tech businesses is called risk capital. And basically what I refer to that, any dividends that were paid by our businesses would not be paid because we'd reinvest that dividend back into, they would reinvest the dividend back into the business for growth. The way you get a very high valuation and potentially very high exit price, i.e. sale price for the business, is a multiple of the revenue, not a multiple of EBITDA. So we don't focus on EBITDA for these disruptive tech businesses. We focus on a multiple of revenue. So there will be these businesses do not pay dividends. The dividends would rather, the excess cash would rather be put into growth. So a bigger exit for you as shareholders. So there would be no dividends. The way it would happen, however, if we sell Mobus, let me take an example of Mobus. If we sell Mobus in 2 years' time, so irrespective whenever you invested, if we sell Mobus and we make, based on what Greg is raising at, let's say we sell and we get out to the next round and he's raising at 400 million hypothetically, and we make a 200 million rand profit. So that 200 million rand profit after capital gains tax that the company will pay and after dividends tax, we would return that profit that is remaining after the other taxes that have to be taken off potentially back to our shareholders as dividends. So that money would come back as dividends unless the board decides to rather reinvest that back into new companies. But that's how we pay dividends. It's not the traditional dividend. It's the profit we make off the sale of a company would be paid back as dividends after all the due taxes have been taken into consideration. Hopefully that answers the question. I just like to answer one other question. There was a question about, there was confusion about the internal rate of return and how it's calculated. Can I just reiterate how internal rate of return is calculated? So an IRR is not an ROI. So let's take an example here. If I have 100 Rand and we are looking at returning a 30% internal rate of return. So the 100 Rand after year one would be 130 Rand. It's gone up 30%. But the next year, it's not another 30 Rand on the 100. It's 30% on the 130. So from 130, it goes to 169. It's then 30% on the 169, which goes up to 217. It is then 30% on the 217, which is 63 Rand, which takes it up to 280. So in this example, in 4 years, your 100 Rand has become 280 Rand. So it is an IRR of 30% and it's a multiple of 3. So you've got roughly a multiple of 3 from your 100 Rand. It's not worth 150 Rand, 160 Rand, it's worth 300 Rand. And that is how an internal rate of return is calculated. It is a per annum rate calculated on the previous price. It's not calculated on the initial price of the shares. So it's not a return of investment, it's an internal rate of return. I hope it clarifies for the people that said there was confusion about how I responded earlier. Lauren, have we got 1 or 2 more questions? We've got about 5 minutes left.
Sure. There are quite a few more. We can get through quite a few quite quickly. You did mention obviously about the profitability of businesses, because one of the other questions was about what's the criteria and whether these businesses are profitable.
Can I just answer that quickly? So
and then
answer that question quickly. It's very important when we make an investment in a business, we look at the business and we look at the size of the market, we look at all these criteria, but we say, if at a minimum, if we don't see that we can make a 10 times return on our capital, and that's why these tech businesses do return these type of multiples, we will not make that investment. So if we put in $1 million, we must see within 5 to 8 years, we must see $10 million coming back to us. If we see that and we see the market's big enough, the entrepreneur's the right entrepreneur for the technology that they're selling, we would make that investment. If we do not see a minimum 10 times return on capital, we will not make that investment. And we've seen probably 1,500 businesses. We've invested in 8. through our Fund 1 and Fund 2. So you can see we're investing in basically 1 in 200 businesses, not because the other businesses are not good businesses, but we just don't see they have the type of returns that we look for to provide that 30 to 38% internal rate of return back to our shareholders. Laura, next question.
Clive, there was a question around the reassurance being a 5 to 8 year investment as having a key resource dependency on yourself. How would you address that?
So that is something that we've actually got a board meeting tomorrow, and it is on the agenda for the board meeting tomorrow. We have had discussions, and we will be putting actions in place just in the event that we need to initiate the key man issue. So put your minds at rest, but it's absolutely front of mind of the board, and that will be discussed at our board meeting tomorrow.
And we've got some entrepreneurial also questions on what are the key factors to introducing an SA company to the global market?
Sorry, just repeat the question, Laurent. I didn't hear you.
What are the key factors to introducing an SA company to the global market?
So I think, just let's take MOBA as an example. So MOBA is the first thing we need to do is, once we've made the investment, so we Section 12J compliant, we make the investment in the South African operation. MOBAS has now set up a domiciliation in Delaware. So they've got a MOBAS holding company in Delaware. MOBA's team, Greg and the team have been in discussions with a number of lawyers and the intellectual property lawyers about exporting the intellectual property and how we can do that to Delaware. And there's a process which I won't go through now. It is a very comprehensive process, and it's a process that needs ex-con approval, which we have ex-con approval to take the MOBA's RP to Delaware and then develop the next version of the RP by leveraging South African resources, but for the Delaware company. So all our companies are looking at re-domiciling globally, and we have a process, and with SARB approval, and we're going through that process right now, that we can take our businesses offshore, either to Luxembourg, to Delaware, depending on where we're going to grow it. If we grow it in America, it will probably be Delaware. If we grow it in Europe, it will probably be Luxembourg. But we'll look at the most tax efficient and tax effective places that we're going to re-domicile our companies. And there's been some new tax law just introduced by SARB, which the old loop structure has now been allowed to be permissible. So that's also an option of taking your RP offshore with the loop structure is now is actually now legal and allowed for startup companies.
Clive, thank you. There was a question around understanding how the fees work, upfront, ongoing, and on exit.
Okay, great. So there's a 3% upfront capital raising charge. So all the costs it takes us to incur to raise capital is a 3% upfront. There then is a standard 2.5% management fee, which is paid for from the venture partner company to the management company for the management of the fund. So the paying of salaries, the rental, the paying of audit fees, legal fees, and everything else is paid off from that 2.5%. So that's a 2.5% quarterly expense based on total capital raise, which is paid monthly in advance of the quarter. And then on exit, it obviously does depend on the domiciliation, but let's talk about South Africa for a second. There would be the company, if we sell the company would be liable for a capital gains tax. And then I believe is whatever the company capital gains tax will be at the time of that exit. There then is a dividends withholding tax, and which is currently 20%, which will be in the hands of the shareholder, which might be held back by Kalon. And then there'll be at the end of the process, when we sell all the companies, there would be, if we return the capital, there'll be a capital gain event in the hands of the investor. So what National Treasury do, or SARS do, is they zero rate your investment. So if you put in R1 million, you get your 450,000 Rand saving now, they will zero rate that 1 million Rand, and you would have to pay tax or capital gains tax at I think it's 28% of the total amount, or 22%, I'm not sure, of the total amount you would pay back as capital gains tax. But if we pay the whole amount as dividends, there won't be a capital gain event. We will make sure we try and maximize and minimize your taxable amount either via dividends or via capital gains. And dividends are currently 20%, and we think capital gains, I think, is currently 22%. So that's how we will get the money back to our shareholders, is through dividends from the exit and sale of all the companies.
Clive, there was a question around if there's no assurance that I can ever sell my shares, why should I invest?
Well, I think, you know, at the end of the day, you're investing in the fund manager. So you're investing in us. And this is where venture capital is, it is seen as a higher risk asset class. It's if you want to see, you know, if you want a guarantee of a certain amount of money back every year or a dividend, we're probably not the right fund for you. So I'll be obviously very frank with you. We're a very high return fund. So we're looking at the 30 to 38% internal rate of return, but it does come with its associated risks. So if you really are looking for an annual dividend, it's probably, there are many Section 12J out there that probably would be a better fit for your capital. If you're looking for a high return, a significantly high return, it does come with associated risk, and hence we cannot guarantee. But if I look at where we are today and I look at our future plans and I look at where all 6 companies are, plus the ones we're about to invest in, we believe at the moment we're on track to deliver the 30 to 38% IRR. However, we cannot give you a guarantee on that remark.
Great. From a value add perspective, Clive, there was a question on what value add Kalon brings, obviously, to businesses, SA businesses, when they invest.
So I think, you know, this is probably whenever I do talks, and I do a lot of lecturing at the universities, and I do a lot of talks to entrepreneurial communities, and I'll say to them, the most important thing you do is pick the right venture capital company. It's absolutely imperative. It's more important than picking your spouse or picking anyone else, because you're going to probably spend more time with your venture capital company than you are with your partner. So we provide 4 types of capital. Probably the least important capital we provide is financial capital. We then provide mentorship capital. So we mentor these companies. I think Greg spoke about it. I think Dan spoke about it. We really have our 200 years experience at the board level, and we provide a lot of mentorship to these companies. And that mentorship includes business building. How do you build the business? How do you take it offshore? How do you get distribution? If you're doing this, how do you hire salespeople? What your structure should look like? And everything to do with business building and scaling a business is what we help them with. The next thing we help the teams with is human capital. So we've got big networks for hiring your CFO or hiring your chief sales officer or hiring people. So we introduce our investee companies to our networks. And lastly, and just as importantly, is our relationships. We open up networks, as Greg was speaking about. We have access to most companies in South Africa, and many companies around the globe. I think back to my Accenture days, there's 400,000 people around the world in Accenture, and I have still many contacts around the world of working with Accenture. Most of the companies now are working with and talking to Accenture South Africa, but we also look, we have the opportunity as we start scaling to scale with my ex-colleagues from Accenture. So those are the 4 types of value add that we add to our investing companies.
Great. There was a question specific to Ozo, which referenced that South African banks recently were warned to stay away from instant EFT. And if you've got a comment on that.
Yeah, I think that's something I was actually going to raise. I think that's a very important question. So there's an initiative. I went through the whole report today that was written by the Reserve Bank, that was written a few months ago, about the open banking initiative, which is exactly around how electronic funds transfer businesses work. So in the European Union, there's something called PSD2, which is because it's regulated there. So this PSD2 enforces the banks to provide an open API, which is an application programming interface, an open API to their customer database, that any company like Ozo will have access to the bank's database and can do the transaction without scraping it from the screen. Now, the report clearly says and states that they are in support of electronic funds transfer. The report says that yes, there's been whilst it is perceived, the banks perceive it as being risky, but at the same time they say the banks are not supporting startups and these nimble, agile startups, which is what customers are looking for. And the banks, from a Reserve Bank point of view, they are supportive of the EFT companies, and they will be regulating it, that it is supported. What they're also saying is they would like to see the PSD2 regulations implemented in South Africa, where the South African banks give access to startups, tech startups, digital disruptive startups, to actually access their databases. So, and what's interesting as well, so not only are we getting support in the report I just read now on open banking and the open banking protocol, the ex-Reserve Bank governor and deputy Reserve Bank governor is an investor in Ozo. So he is very familiar with the law, very familiar with open banking and what the legislation is going to do with open banking. So yes, there's a lot of noise, and there's a lot of noise in the market. We see it all the time. We discuss it at the board meetings, but absolutely not an issue. The screen scraping is done by EFT companies. It's done by financial services company, accounting companies, where they scrape the information for the financial statements. There's tens and tens or hundreds of companies that are doing exactly what Ozo do. So really nothing to worry about. It's absolutely in hand. And the report I read today on open banking confirms that it's not an issue.
Great, Clive. There are a few more questions coming through at the moment.
Lauren, I think we need to, respect everyone's time here. I think
Right.
if everyone doesn't mind, I'm happy to carry on, or else we can take the questions and send the responses via email back to everyone. I just want to respect people's time. It is 5 minutes past 6, and we did commit to finish this at 6 o'clock. So I'm not sure, Lauren, could we do a poll to see if people want to stay, or how could we do that?
Yeah, I suppose a lot of the guys have indicated to say thanks. I'm not sure if we can launch a poll right now. The best would be if guys are still interested in staying. We've got about 160 people that are still online.
So are there any absolutely pertinent questions, Ron? I think what I suggest, if they're really pertinent issues for the 160 people to hear, let me answer them. And others, I think let's put them onto an email, and we'll respond in the next couple of days to everyone, that the 700-800 people that were accepted the invitation.
Great. Yeah, I think we've covered most of the questions, Clive. Obviously, additional questions we can, as you say, we'll send out to everyone.
So please, thank you everyone for participating, and apologies about going over time. Please, if you have any questions, I think the best is to send it to LeronV, LDRONV, at kalonvp, kalonvp.com. And Ron and the team, myself, will respond to those questions as soon as we can. In fact, we will consolidate all those questions into one email and send them all back to yourselves and all the other people that did accept the invitation. I did have a lot of people sending apologies that the meetings had overrun and they couldn't attend the session. So thanks once again. I really hope to see many of you come out, or current investors, to repeat your investment, and a whole lot of new investors. And we look forward to welcoming you to the